very bright people don't do very well at this. There must be something that we bring with us that's in our culture that actually makes trading difficult for us. Perhaps our attitude towards loss, or
you hear fear, you hear greed, and you hear being correct quite a bit. Men, we all like to be correct in what we're doing. When you're in a trade, sometimes your psychology takes over, in that, suppose you go into a trade and you're going to risk 20 points, but now you're down 15, 16, 17 points, and in your mind, you're not wrong yet. You're losing, but you're not wrong yet. But boy, if you get taken out of the 20, boy, I did something wrong, okay? And I don't want to be wrong, so I'm going to move my stop loss another 10 points, because I think that, I don't want to get out here. That's how you compound your losses. But interestingly enough, it works in the reverse as well. It's almost more detrimental to you when you're running a profitable position, because one of the biggest mistakes that people make is they don't let their profits run. Okay, because they have this need to validate that they were right in the trade. And if you get up a few points or halfway to what your goal was going to be, and it starts coming back a little bit, your body is saying, take the money off the table. It was a winning trade. It was a winning trade. But that's just not how it works. And that causes you a lot more trouble in the long run if you take your profits off too quickly.
In the three main components of trading, where you've got risk, I know you can't separate them out exactly, but risk management, money management, and technical analysis.
Yes.
Where do you think a trader's edge, as it's called, actually lies?
Well, it's in the risk management and the money management, how you manage your account.
More so than the technical analysis?
Oh, absolutely, because technical analysis is great. That's a starting point. That gives you trading opportunities, okay? But, different people, different parts of the world, different currency pairs, different trading strategies. There are so many different trading strategies out there, so many different time frames of charts that you could be looking at. Just totally different numbers, formulas, indicators, oscillators, all the things that you hear that people use in order to help make a trading decision. You know what? It's not about that. It's about finding a particular pattern or a plan that works on a consistent basis, and then executing how to trade that plan.
Beam has a brokerage service.
We do.
And you also provide education for your clients to make them successful.
We do.
Which is very important. When you get your clients starting off when they don't really know much about it, do you have a very simple system that makes them absolutely successful early on?
Yeah, absolutely. I offer pretty much a 2-day class to my new clients who open up with our brokerage firm. Okay, 2-day class where I teach really the basics of how to make money in the market, the things that we just talked about. I cut through a lot of the nonsense. I don't spend a week on technical analysis, because spending a week on technical analysis is overkill if you don't know how to execute even one particular strategy. I have a strategy that I like. It's my personal favorite. It can be applied to a 1-hour time chart or 4-hour time chart. In particular, it works beautifully on daily time charts for clients who have a full-time job or don't have the ability to sit in front of a computer all day long. All right, come home once, the end of the day, take a look at the charts, look at your daily charts closing, and I have a fabulous strategy that's easy to comprehend and understand and be able to play successfully.
And so you teach the mechanics of trading. Do you spend some time with psychology as well?
You have to. Psychology is all part of the game as well, and I touched on it before a little bit. About the fear of leaving money. Of not turning a winner into a loser. So you get out of a trade prematurely because it goes through its inevitable little, drawdown, even if you're in a profitable trade. Again, psychology, the inane, whatever it is in us that just refuses to admit that we're wrong, all right, that will get you into a big problem on the downside by failing to accept the risk of the trade and not actually suffering or taking your punishment on a bad trade, because everybody has bad trades.
One of the common things about traders who are struggling is that though they say they're risk takers, though they accept risk, when you drill down, often they're not accepting risk, are they?
No, and that's a great point, and that's one of the things I teach. It's actually a whole little, about a half-hour thing. It's called accepting the risk in a trade. All right, you have to do that going in. You have to say to yourself, on my $1,000 account, I'm going to risk $30 on this trade. You take the $30 out of your pocket and you just put it somewhere else. Okay, you're risking it. Forget about it. Over and done. Now let the trade play out. You have to accept that you're going to lose $30. If you're going to put it out there to be worked with, you're putting it at risk. You have to accept that risk beforehand and be prepared to lose that $30.
Michael, thank you very much.
Well, thank you. Pleasure.